Good evening. This is Ken Long from Tortoise Capital with a review of the trade of the day for April 24th and 25th, 2013. This is a case study in symbol SLW, or silver Wheaton. And I want to point out the strong connection between swing trading and intraday trading, or what we call core and turbo, and then the power of using the regression line crossover framework in multiple time frames that help us find different styles of trades and yet bring a consistent, disciplined look and interpretation to price action. And you'll also notice the importance of finding what we call critical states. States where price is expected or would not be unusual for price to make a sharp move in either direction, and thus favors the larger moves in shorter time frames. So this one begins with a simple tactical trade on a 3-minute chart. We were studying silver Wheaton on the 24th of April because of strong moves in silver coming off a bottom. And so at 1:45, after having traded this upward channel in the morning on silver and in silver Wheaton, what we had here was a generally uptrending market that looked like it was riding in the top of the river, and the Bollinger Band pinched, and we think of this as the sideways quiet channel. So what we have here, just briefly, is 3-minute charts. Dark blue is a 30-period Bollinger Band plus or minus 1. The light blue is what we call the floodplain. That's the 30-period Bollinger Band plus or minus 2, with the Bollinger Band mean indicated in red. Thin blue is a 10-period linear moving average. Moving linear regression, and the thick black is the 30-period moving linear regression. And so we've just got some horizontal and vertical bars there to indicate some framing opportunities here, and so. This vertical blue line is when we went ahead and initiated the entry, and then what we had here was a series of a double bottom here, held support inside the river vicinity, the Bollinger Band mean. The 30 and the 10 regression lines are sloping up. The Bollinger Band mean and the river is sloping up. And now we have a higher low that just tested the Bollinger Band mean, and then by the breakout of the ribbon, which is this orange 2-period Bollinger Band. So we take an entry here at 23.49-ish with a 10-cent initial stop near the bottom of the river. Fortunate, we were lucky enough to be prepared, and within about 9 minutes, this takes off and makes a nice run up. When it gets to 23.68, we've got 2R in hand and what feels like momentum, and so we buy another position here at 23.68, and it goes to 23.78. So we're really into this now pretty well, and we get a reversal pattern here. We have a tall green bar. A red bar forms with a lower high, and then the second red bar takes out the low of the first red bar. When that happens, it's sort of a 3-bar reversal. You can see the ribbon has already started to shift. The 10-period regression line is rolling over. It's gonna meet the 30-period out here soon with the regression line crossover signal. Anyway, we can see all that forming, so we decide to go ahead and get out here inside the red circle, and that's good for a couple R. And now this is, I want to put this trade inside the context of the next couple of charts on different time frames, because now that we've got some money made by this trade, we're thinking about continuing to trade this, and we're looking at different time frames. That same trade now looks like this on 15-minute time frames. You can see why we were interested in this. There had been a long period of sideways quiet channel and had a breakout in the morning, and this is the pattern that we were trading, this run up. So we got a good piece of this one, the pull back to the edge of the river and continuation, and then exit as it's into the sideways quiet channel. Then when that doesn't fail and holds support at the edge of the river on the 15s, that's this price move from this green arrow here up into the tip is, and where we exit it in that doji. That's what that second leg up looks like with a couple R on the 15 minutes. So we really like this as a continuation pattern after a regression line crossover outside the river, which doesn't fail but just continues to move out. This entry is also indicated here because it made a new ribbon high. In other words, we kind of discount this long spiky tail here, but when price ribbon makes a new high over the previous ribbon, now you can see we were taking out a double top. That makes us even more confident buying around what our fill was actually at about 23.48. So we like this on the 15-minute chart. When we look at the hourly chart, now we're starting and we're looking back about 8 days. Now you can see that SLW had been making new lows, powerful new lows, all the way down from 25, and had found on a daily basis a triple bottom here in the floodplain. The 30-period regression line had found a low and then is rolling over and actually crosses the Bollinger Band mean here and leaves on the strength of that morning move. And so what we have now is the beginning of a sideways quiet channel that hit and the ribbon leaving the river here at 23, and that's why we liked it in the morning. Now the second leg up, that little 2R trade we just showed, is contained inside this information from the green arrow up into the RX around 23.68. So that's really just a continuation pattern inside a larger trend. And so that's what we look like here on hourlies, excuse me. Yeah, I like hourlies for executing swing trades for that reason. When we look at dailies, now you can see that price has collapsed even further. Now this is starting to look like a washout pattern. And over the last 6 months or so, silver wheat has moved from 41.40 through a sideways quiet channel and crushed with 2 legs down, coming down all the way to 21.60. Seems to have found support during the last week. Ribbon has re-entered the floodplain, crossed the 30-period regression line. The 10-period is just rolling over. We think of this as the Z swing, and that is when the ribbon makes a low more than 2 sigma below the mean. So it's making that little reversal down here inside or outside the floodplain. The floodplain is the edge of 2.0 minus 2.0 on the Z-score. And so now you can see that the trades we're making on that one day on the 24th are happening inside this tiny little space. And if we get nothing more than just a retest of the gap or back to the Bollinger Band mean, there's an extraordinary reward to risk ratio trade just on something that might look like a dead cat bounce. So we really like this on a daily chart. When you expand this out to a weekly and looking back like 5 years or so, you can see what we have here is now almost a high volatility channeling trade. And now you can see we've come much more than 2 sigma to the downside on a weekly chart, and it's found support down here at a halfway up this long run up, which went from 3 to 48 on the scale. And now what we have is a critical state finding support right where it found support last time. If there was a move from 23.5 all the way up to 40. So can it move like that? It certainly can, and it seems to do it all the time. And so it's nice to be able, on the shorter time frame, start making some money on this that can be used to fund what may eventually be a really powerful move if this critical support level holds. But the nice thing is, if it does fail here, then we do have all this territory below down to the next nearest support level, which is down around 18. So we have a critical state here on multiple time frame, multiple reasons to be interested in this. And in each case, the regression line crossover framework gives us a way to interpret the information contained in the price series. So we like this in multiple time frames. Well, To continue with the next part of the day, then we have a couple R in hand out of these two entries. We're back on the 3 minutes and the intraday on the 24th. So we get an entry at sideways quiet channel, the second position on 2R in hand with momentum. Cash it at the logical spot here when the RLCO outside the river is starting to set up. So now we're looking at places to get long on this thing again, and I'm also interested in holding this for a swing trade. So I'm going to try to get a price improvement in the last hour and a half of the market. And so places where I expected to find support, or wouldn't be surprised to find support: edge of the river, inside the river but not the Bollinger Band mean, at the Bollinger Band mean, inside the river between the mean and the lower half of the southern shore of the river, or at the southern shore of the river. In any one of those places, especially after the strong move it's had up, I'm looking to get long again as a continuation pattern. And so I like what this is shaping up right here at the Bollinger Band mean. And so I decide I want to buy a overnight position, and instead of using that 10-cent stop, I want to use a dollar stop. So I'm 10 times as wide on this thing. So same level of risk, only now using the overnight risk level. So I'm happy to buy this at 23.68 with a full dollar stop. Well, shortly thereafter, this entry down here allows us to get turboed up on this again when the price holds support at the Bollinger Band mean and now takes off, and now we have the price ribbon leaving the river once more, and now in the last 45 minutes there's a move that's available from 23.70 up to 24.10, so we can put some turbo back on and then revert back to just holding this overnight on the core position, which is using a dollar stop, and which is now fully funded by the market's money that we were able to earn on those legs up. So what I like to think of as a free overnight trade. To put that into perspective, now this is the 24th, and this is the follow through the next day. This was the first tactical trade here, when it buying around 23.48 with the exit in hand here. A pull back to the Bollinger Band mean, which allows us to deliberately buy the swing trade. We can get turbo back on it again when it leaves the river, and then exit before the close. And now all we're doing is holding an overnight position, which was initiated down here at 23.65, as a continuation of this rebound from extremely oversold conditions. And with 1 day of momentum built in, we felt pretty good that there might be a good move early in the morning with a lot of end-of-day traders starting to buy, and that's in fact what happens. We get this, what I think of as an opportunistic moment when it moves all the way up to 24.65 in the morning and starts selling off. So we cash this this extreme move to the upside, what Kim Anderson calls the RL stretch, or the regression line stretch, and sure enough, we start stalking this rascal again. It comes back, finds support of the Bollinger Band mean. This is the next follow through, and when price leaves the ribbon, we just keep lather, rinse, repeat. Get some entries around 24.15, ride those up to 24.50 for the next turbo size position. So we still have the swing trade position on, and then we're adding turbo positions intraday with those much tighter stops and larger position size, as noted there. Well, after we get that run up to, which ends up going all the way up to 24.80, and we get the exit when price re-enters the river, because we get that regression line crossover, we're waiting and stalking. This thing stabilizes and gets into a sideways quiet channel here inside the river. When it makes a double bottom here at the bottom of the river, and is starting to leave the river once more after in a true sideways quiet channel entry now, we go ahead and frame that up, and we get another entry at 24.50 with a 20-cent initial stop, and it's lather, rinse, repeat once more. What we like about this entry here, leaving the river, is we look for, after this moment of sell-off in here and held support we're looking for the swing low sell-off. We want to see a closed green bar with a higher low. It would be nice if we could take out the previous one, but it doesn't have to, as long as we get a green bar here. And then the open green bar, the next one, as long as it has not made a new low, when it takes out that first green bar is where we like to enter. And in this case, that coincided nicely with the price ribbon leaving the river, so that becomes an SQC, and that's sort of an automatic entry, a not later than entry in this position. And what we get once more is almost the same pattern we had before. We get the entry, comes back, finds natural support here. If you exited here to scratch that, absolutely nothing wrong with that, provided that you get back in where you're supposed to at this location. In this case, we had enough money in hand from earlier wins that I felt pretty comfortable letting it test support and continue. Never even moved our 20-cent stop here. So we get the second position on. It makes its normal move, and this felt like a pretty good place to exit for another couple R. And so that's the regression line crossover framework being applied in multiple time frames, showing the connection between the core positions that we like to think of for swing trading and holding overnight, and the turbo positions when we're adding to it intraday at moments of advantage, using the regression line crossover framework to help guide our sense making in our interpretation of price action intraday. Same lens that we use for framing swing trades or position trades in the longer time frames. It's turning out to be something like a universal lens for understanding and interpreting the market. So that's today's case study, today's trade of the day. Ken Long from Tortoise Capital. Keep your powder dry and your risk measured.